Hey everybody, Lawrence here for financialthing.com. It is the Thursday evening live stream that we do every week, or most weeks, unless something horrific happens, but so far so good. Glad everybody is joining us tonight. If you can, please hit that thumbs up so I don't have to nag you about it earlier, further on in the stream. It helps us out a ton with the old YouTube search. We will be announcing the holiday giveaway winners. As I said last week, we are doing, I think, six winners. I think it was six. Yeah, so I'll be announcing it at the end of the stream, so hang out. Listen, you could be one of the lucky winners. And today I have a special guest. It is Cormac Leech. He is the CEO of AxiaFunder, which is something that kind of came across my radar pretty recently. I'm going to show you the website very quickly so you can see what this is. Again, this is not something that is paid or anything like that. It's just something I found pretty interesting, a little niche inside of our peer-to-peer lending world. But they are a company that does peer-to-peer funding of litigation, so legal funding. And we're going to find out more about what exactly Cormac is cooking up over there at Axia. And if you have any questions or comments, put them down. We'll do a Q&A at the end. As you know, I'm always looking for other new investment opportunities through the peer-to-peer space. So Axia popped up, and we are going to get right into it. Hopefully this works. Here we go. Is he on there? No, why is he not there? Hold on one second. Let me try to figure out a little technical thing going on. Hold on. All right, just bear with me, Cormac. I know we'll get you right on in a second. I might have to do a screen share here because I don't know why that is not working, but it should automatically pop you on. Let me try this instead. Hold on one second here. There's always technical things that we have to deal with here on the live stream. Is nothing new. Hold on one second. Just make sure I have you.
Do you want to drop me off and
there we go.
Reconnect? Or?
I think we should be good now. If everybody could just let me know, can you hear Cormac okay? Let me pull up the comments. Just make sure. We're doing it a little bit rigged here tonight. Not normally the way we do it, but I'll go
testing
ahead.
1 2 3.
Testing 1 2 3. Hold on, let's just get a yes from everybody. Make sure they can hear you okay in the screen. If somebody could just let me know. Can you hear Cormac okay? Hang on. There's a little bit of a delay on when the chats come through YouTube. So okay, perfect. Everybody says they can hear you. We are good to go. So I'm gonna just minimize myself over here in the background. Cormac, first of all, thank you for joining us. I have to take responsibility. I did drop the ball a little bit today with getting you our discussion points. For some reason, it was just a crazy week, and I thought I had sent them through, but I did not. But now you have the discussion points, and we're just going to have a chat about what exactly AxiaFunder is. And first of all, if you could just tell me, what is your business background before you started this Axia funding?
Yeah. Well, first of all, thanks, Lawrence, for the opportunity to be on. So my background, if we go way back at college, I was a mathematician doing mathematical science, and then went into derivatives. And I've got about 25 years of investment banking experience. Most recently, before I jumped into Axia, I was writing research on large cap banks and also raising capital and working closely with alternative finance companies like RateSetter, that I know you know well, Zopa, Funding Circle, Lending Club. The whole peer-to-peer sector fascinated me. And when I was at a company called Liberum, which is a small boutique investment bank in London, we set up a subsidiary of Liberum that was dedicated to alternative finance, and I was working there I was one of the co-founders of that subsidiary, and we raised around 2 billion US dollars for some closed-end investment trusts that were permanent capital vehicles lending into alternative finance companies. So I found the whole sector fascinating, and that kind of laid the ground, if you like. And then when I came across litigation funding, and we can dive into how that happened, but basically I had a situation where I needed litigation capital myself. But basically when I discovered the litigation funding sector, my background in alternative finance really meant that I could just see the opportunity in litigation finance because it's a completely unserved asset class. It doesn't have enough capital. The opportunities for investors to make very high returns are there, but it's quite difficult to structure. So, it was something that I just found fascinating. And 4 years later, we're, hopefully getting good traction.
Okay, so you said you launched about 4 years ago, is that right? So about in 2018?
That's right. Yeah, so our first offer was on the platform in January 2019. So that's almost exactly 3 years ago. And it was a tiny amount of capital, so it was minimal viable product investment opportunity. We were literally simply funding the court fees. So, I don't know how much you know about commercial litigation, but to start the process, you issue a claim. It costs £10,000 to do that. So literally we raised £10,000 plus £2,000 of administration fees. And that was our first offer. I think we were offering returns to investors of about 65% on that particular one. And it funded pretty quickly. But as you can imagine, at the very beginning, we didn't have much of an investor network. So that was our first one.
Oh, okay. And so hold on one second. I'm just going to share my screen here because I'm not sure you're coming up on it. Hopefully that will take care of that. 1 second. Okay. Hopefully everybody can see you now, I hope. That might be a bit better. So you started off with a small amount. So for anybody that doesn't really understand, what it is your company does, I'm just going to briefly sort of explain. You get people like me, who's a retail investor, that put up money. And then from there, you take the money, you fund it to legal companies that need capital to go into the courtroom to finance just court proceedings, right? That could be quite expensive and take a while to run out. Is that correct? Right.
Probably deserves to be, perhaps low single-digit percentages of your total investment portfolio, if that makes sense. But I do think it's a very interesting product because it's relatively nascent and it has a relative shortage of capital. The returns are very high. So we'll maybe dig into that in more detail in a little bit, but basically on a portfolio basis, we think we can generate returns of 20 to 30% per annum for investors, which, you know, in the current environment with interest rates at close to zero and equity relatively, you know, expensively valued, you know, we think that's particularly interesting. But essentially the way it works, you know, if I can just take you, if it's helpful, I can take you through the journey of a case. You know, how does a case end up on the platform? Is that helpful?
Yeah, absolutely. Yeah.
So, you know, first of all, you know, we typically reject about 90% of the cases that come to us. And over half of the cases that come to us, it's actually the claimant contacting us directly through the website. So, you know, we'll have claimants who will contact us or email us through the website and say, you know, I have this claim. Here's why I think it's a strong claim. I need 200, 400, 600,000 pounds to pay for my legal costs, to pay for my insurance, pay for my solicitor, my barrister, various other expenses, and sometimes we'll also reimburse expenses that the claimant has already incurred. Mm-hmm. But so they'll describe the proposition to us, and you know, we have 10 metrics that we use to evaluate whether we think cases are strong or not. So we're looking at the merits of the case. Does the defendant have sufficient money to pay a settlement? Is it possible to enforce any judgment that may come out of the court case? Is the claim value large enough relative to the cost of litigation? Is there a solution for adverse cost risk? So in common law jurisdictions like the UK or Australia or Canada, if you lose the case, you have to pay the other side's costs. Mm-hmm. And if the claimant is unable to pay those costs, the judge can decide to go and seek those costs from the investors backing the case. So to protect investors from that, there are various things we can do. We can make sure that there's after the event insurance in place. So an insurance company will step in and pay those costs if the case doesn't work out. And we also typically are funding these cases through a limited vehicle, so either a limited company or a limited partnership, which again gives protection to investors. But hopefully you can see that it's a relatively complex product. And therefore, you know, it deserves to be a relatively small part of people's portfolio. And also it's aimed at relatively sophisticated investors. So the majority of the investors on our platform are finance professionals. You know, they typically have day jobs at banks or funds, you know, these types of careers. Yeah.
Yeah. And it sounds, you know, one of the biggest issues that I've found with peer-to-peer lending is risk assessment, especially when it comes to, you know, most of the time we're dealing with business lending, sometimes property lending and things like that. And those types of things are a little bit easier to assess with the risk. But as far as what you're doing now, you're looking at a possible court case and going, what is the percentage chances that we have if we fund this, that these people are going to win? Now, you don't necessarily have a legal background, but I know I've looked on your About Us and the team that you have, and you have some legal experts, I think, who work alongside you. How would an average investor like myself be able to assess the risk of, say, loan number A that was coming up for litigation, and what chance that I might have of actually getting capital and some profit back from funding that court case? How do you assess that risk?
Yeah, it's a good question. So first of all, we you know, if you go back in time and look at Prosper and Lending Club in their first iteration back in, I think it was 2007, their initial business model was the wisdom of crowds. You know, so we will create a platform, and anybody who wants to borrow money can just ask for money on the platform, and anybody who wants to lend to them can, you know, do their own research and decide if they want to lend. And the idea was that the wisdom of crowds would prevail, and, you know, only creditworthy borrowers would get capital. But of course, it worked horribly. So, you know, a lot of lenders lost a lot of money on Prosper and Lending Club back in 2007, 2008. And, you know, there was a whole restructuring. The regulator came in. They had to completely redesign their process such that they were doing the vetting and the credit underwriting in-house in the platform. So the relevance of that for litigation funding is, first of all, litigation funding is a lot more difficult than underwriting a loan. Yeah, it's more complicated. So we absolutely believe we need to very carefully vet every single case that we put on the platform. And the consequence of that is that we believe if investors just come in and mechanically put a fixed amount of capital into every case that we put on the platform, our strong expectation is that that will generate a good portfolio return for them. So I like to think we've already pre-vetted everything we're putting on the platform. However, because we're a young platform and we don't have a huge amount of track record yet, our principle is to provide all the information that investors need so they can do their own homework. We want investors to second guess our underwriting and make up their own mind. And to enable that process, if I take you through the investor journey, so if someone registers, signs up to our newsletter and then registers as an investor and passes our suitability test, so we have something like 10 or 12 questions people have to answer correctly, such that they are an approved investor, such that they can see the offers that we're providing. But supposing they've got through that, then when there's a new case, there will be an anonymized profile on our website. And people can read that, so they can't figure out who the defendant is or the claimant, but if it looks interesting, they can click on it and ask to find out more. We can then look at their request to get more information and decide if we want to give them access. We then ask them to sign a non-disclosure agreement, certify they don't have any conflict with the parties, and then we take them through to a page that describes who the claimant is, who the defendant is, kind of an executive summary profile of what the case is about. And what I hope is helpful for investors, we typically have a 3 or 4 minute video of the solicitor running the case, just basically giving literally a 4-minute summary of the key aspects of the case. We then have a 40 or typically about a 40-page information memorandum that takes you through all the details of the case, so the financials, the legals, how we scored the case on 10 different criteria, and the expected financials if it settles at different points in time. So there's a whole bunch of detail. Kind of the underlying objective for us is to provide all the information that a professional litigation funder would look for when trying to make a decision whether or not they want to invest. So, the platform is kind of designed almost like a pyramid, So if you're a guy who's in a hurry and just wants to put in some money, you can just look at the very top of the information we're providing. But we're also giving you all the detail if you want to drill down into the foundations of what we're doing. Mm-hmm. And then we also provide a data room. So we provide as much of the correspondence between the parties as we can. We provide the details of the insurance. We provide as much of the legal opinion from the barristers as we can. There's some privileged information considerations we need to be alive to. But the principle is, that we give you, depending how much time and how much energy you want to put into drilling down, the information is there. So you can spend 10 seconds and invest, £1,000, or you can drill down and spend, a couple of days on it and, invest a larger amount.
So, and the minimum is £1,000, is that correct, per case?
That's right. It used to be a £500 minimum, but I'm not sure how much you and your viewers are aware, but there's a push in the UK to protect mass market retail from alternative finance. The prevailing wisdom seems to be that it's been too easy for people to put money into alternative finance without really understanding what they're doing.
Yeah.
So some of the safeguards that have been coming in include increasing the minimum, or encouraging folks like me to increase the minimum thresholds to make it a little bit harder for people just to put money in without having done their homework.
So
properly.
they can lose more money if they can lose more money if they're not experienced.
It's slightly counterintuitive, right? Yeah. To protect retail investors, we're increasing our minimum investment amount, but it is what it is. So is that
the FCA putting the screws onto you, or?
it it's not been a direct mandate, but it's just, we read the tea leaves, right? We can read
Yeah.
the papers, and we talk to advisors, and the general wisdom seems to be that it's the right thing to do is to increase the minimum.
Yeah.
Yeah.
Well, that's okay. I mean, yeah, I don't necessarily agree with that myself. I think that a lot of people who have become seasoned investors within peer-to-peer lending would never have done it if they'd had to have started out with these larger amounts, and I think that might be something that actually puts the dampers on new people entering because but everybody has their own thoughts on that, and I'm sure it's nothing.
Yeah, I mean, in some ways it's helpful to us because it creates a barrier to entry, right?
Yeah.
So it would be more difficult for me today to launch AxiaFunder. It's more difficult today than it was a couple of years ago, right?
Yeah, absolutely. So you have mentioned in the past when we first started this that you sort of discovered this need for litigation finance because you needed it yourself. And I was thinking about there's all these different niches in peer-to-peer lending, and some have worked, obviously, as we know, some have not. Out of everything that you could have chosen to niche into with peer-to-peer, you choose litigation. Could you share what exactly led you to need, to discover this? Can you tell me a little bit more about that?
Yeah, I mean, it's a good question. So I read a book by Peter Thiel, I think he wrote a book called 0 to 1. And one of the insights in the book is that, if you want to build a business, it's important to find a niche that's relatively underserved. So you don't try and offer a product that takes on, Amazon or Google. You pick a very narrow niche where you think you can, gain some significant market share. And then once you've done well in that niche, you can think about expanding from there. So litigation finance to me definitely ticked that box. And the other thing that struck me about it was, in terms of setting up a new platform, the available margins were perhaps 5 to 10 times higher than they are in peer-to-peer lending, because the returns are higher, and it's a much, it's a very poorly served sector, I would say, particularly for smaller commercial litigation claims. So it's underserved. There's nobody currently, except for us, to my knowledge, offering a for-profit alternative finance platform solution. And the returns are high. So, I could see that we could reach break even on relatively low volumes, compared to the volumes we would need to achieve in peer-to-peer lending to become profitable.
And so why did you...
I'm sorry,
go ahead.
The other point to mention is, I'm just naturally a nerd. I enjoy complexity and challenge, and, I like getting into the weeds on things. So I used to trade derivatives, and I studied mathematics, used to writing very large research reports on banks, building very large financial models. So it kind of suits my natural, proclivities, if I can put it like that.
Yeah, that makes sense. And why did you decide to leave the banking world? You said you came from that side of things to this. Did you just want to become an entrepreneur and start something yourself, or were you sick of the banking world?
So I was, it depends how much detail you want to go into, but banks are rapidly getting disrupted by fintech, and the thing that alerted me to it with very large, kind of alarm bells, if I can put it like that, was the Bank of England, right? So the very center of the financial system. I think it was the head of research there. I'm not sure exactly what his title was, but Andrew Haldane was one of the leading figures there. He wrote a paper back, I think it was in 2012, where he was basically saying, guys, banking as we know it is about to get radically, changed. And at the time, it was a fringe view. And, I was a bank research analyst, and I was writing research saying fintech is going to have a much bigger impact on banks than people realize. And people were, I got a lot of pushback on that view. And of course, now it's almost consensus that, the debate at the moment is, will banks as we know it be still around in 10 years, or, will it take 30 or 40 years for them to get totally disrupted? But I mean, the direction of travel is very, very clear. So I realized, I could stay writing research on, a buggy whip company, if I can put it like that, or, a company, a sector that was about to disappear. or I could embrace the alternative finance revolution, if you like, and look to get involved. And of course, it's a lot more fun, right? So it's more fun building a new business than dealing with the incumbents, right?
I totally agree with that. Yeah, we'll have to have a little discussion about cryptocurrency at the end too, because it's something that I'm personally very interested in. Let's talk about what kind of return rates can lenders expect to earn. Now, and imagine these court cases could drag on for quite a lot of time. So I have a couple of questions. First of all, what are the kind of average return rates that somebody might see from investing through Axia funding? And also, what happens if these cases need more money? Do you go back for a round two through the platform to raise that for them, or how's that work?
Yeah. So there's quite a few questions embedded in there. So maybe kind of firstly in talking about the portfolio expected returns that we think we can offer investors. So because it's a relatively high risk proposition, we're a startup. We don't have a huge amount of track record. My starting point is to be relevant to investors. I need to aim to make investors on a portfolio basis around 30% per annum to compensate them for the risks that I'm asking them to take. So that's the starting point. And then it's almost like we reverse engineer from there, how much we need to charge the claimant. Yeah. So, I mean, one useful framework I think to think about is statistically 80 or 90% of commercial litigation cases settle pre-trial. So I'll just say that again, at least 80% of these settle. They never get near the courtroom. And that's very good for us as funders because the way that we contract with the claimant, we're senior in the cash waterfall. So if any proceeds come from the case, either from a judgment, a trial, or a settlement, we get paid first. We get our principal back, and then we get our return along pari passu with the insurance company, but that's kind of a detail. Then the lawyers get paid any contingent fees that they are owed from the case, and then the claimant gets the net proceeds. Now, that's very important because the decision maker in any settlement is the claimant. Yeah. So the claimant, there's correspondence between the claimant and the defendant. They go to mediate. They try to find a settlement, and to kind of settle the claim. The defendant makes an offer, and then of course the claimant is doing the calculation. Okay, so if the defendant pays me this much, I've got to pay a certain amount to repay the principal of the funder, pay a return to the funder, pay the lawyers, and how much is left for me. He's not going to accept any settlement offer that's going to result in him getting zero. And if he's getting paid something, by definition, we're senior in the cash waterfall. We're getting paid, in theory, we're getting paid our full contractual return. Now, in reality, there's sometimes some horse trading going on where the defendant makes a settlement offer, and then in order to make everything work, sometimes we'll take a haircut on the return. So we'll get all of our principal back, but instead of getting 100% per annum return on our capital, we might accept, for example, 50 or 60% per annum in order to make the numbers work. But we're typically happy if we're getting our principal back, and if we're making 50% per annum, it's not a bad outcome. So that hopefully gives you an idea about how we price the cases. The cases can run for quite a long time. So litigation is a very slow process, and these are illiquid investments. And we tell investors they can run on average for 2 to 3 years. So you're only really putting money in that you can afford to have invested for that period of time. And then you asked another question: if a case needs more money, what do we do? So it's relatively simple. If a case, so first of all, when we're first funding a case, we have a budget. So we have an estimate from the solicitor. It's called a precedent H budget. So the solicitor will map out how much money he needs at each step of the process through defense, response to defense, disclosure, witness statements, trial. How much capital is needed for that. So we're typically looking to raise that full amount of capital to finance the case right to the end of trial. Now, sometimes, the estimates are wrong and more capital is needed. And in that instance, we'll just, treat it almost like a new case. We'll write a new offer document. We'll get it reviewed by our compliance team. We'll go out to investors and say, we need more capital. And depending on whether the new investors are taking more risk, we'll offer them a higher return. And sometimes we'll make them senior in some respects to the original investors. So it's in some ways similar to a company doing a rights issue. If a company needs more capital, they'll issue shares at a discount to the current share price to attract more capital in, such that the company can keep going. It's a similar kind of principle for us. It's better, to have a little bit of dilution in some ways of your investment in order to attract the capital so that the show can continue. So I think I answered all your questions. So we've put a few in there, right?
Yeah, absolutely. So the big question is going to be, obviously, what is the percentage of cases that you've had on the platform that actually have resulted in you would consider a success? And I think you've still got quite a few that are running through when I look through your statistics on the case loads.
Yeah. Yeah, so we have, I think it's 14 cases that we have funded. Of those, 6 have resolved positively, and 8 are still ongoing. So it's still early days. As I said, litigation is a slow process. But so far, touch wood, we've had 6 positive resolutions. Case wins, for want of a better word, and 8 are still ongoing. So we expect over the long run to have a positive resolution on about 70% of the cases. So we expect 70% of the cases to either settle pre-trial or win at trial, and for investors to get their principal back and a good return. About 70% of the time, and we expect to lose about 30% of the time. And when you put that all into a portfolio calculator, that gets you to about 30%, 20 to 30% to be conservative, per annum returns. So, as I said, it's not a simple product, but
no, it's probably the most complicated. Yeah. So I have to hold your feet to the fire on this because it's something that pops up into my head. When I talk to the business owners and peer-to-peer lending a lot about profitability, you've been running since 2018. You've funded about 14 cases. How about on the demand and supply side? One of the problems we're having right now is there's too much money supply in peer-to-peer where people just can't get into loans. So if you've only funded 14 loans over the course of the business, is it difficult relatively for people to actually get invested into these loans because there's too much investor supply of money?
Yeah, it's a good question. I mean, so every platform inevitably always has a bottleneck, either on the supply side or the the demand side. So for us, that bottleneck moves around. So on some of our smaller cases, you're absolutely right. Investors can struggle to get access to the offer. So to give you some data on that, we funded a case just before Christmas, and it funded. So when we marketed it to investors, it funded almost immediately. In literally in a few hours, it effectively funded. So that's correct. That's a true statement when we're raising, let's say, 150,000. However, because our investor network is still relatively small, we struggle at the moment, and hopefully this will change, but we struggle to raise sufficient capital to fund cases that need 500,000 or 600,000 pounds. Mm-hmm. So it's very much one extreme or the other. So if it's 150,000, it will fund in hours. Mm-hmm. But if it's 500,000 or 600,000, we were trying to fund a 500,000 pound case for literally 4 or 5 months. Mm-hmm. So it varies quite a bit. Having said that, we are making a pretty strong push to reach out to private equity firms and family offices and some institutions. So we think that we'll be able to fund those larger cases And your listeners might say, okay, that means retail is going to struggle to get involved. But actually, if we can start getting consistent ability to fund those larger cases, that will actually create more opportunity for retail. Because at the moment we're slow to sign up to fund those larger cases because we're not confident we can fund them, if that makes sense.
Mm-hmm.
So by virtue of having those bigger players, we can then put these larger cases on the platform, and then high net worth and sophisticated retail investors will be able to access them. Because there's an interesting kind of threshold in commercial litigation. To do anything meaningful in the UK commercial courts, you really need to be raising £500,000 to £700,000. Now, we managed to be relevant and stay involved really because oftentimes the lawyers who are running the case are willing to take a lot of their fees on a contingent basis, which means the actual cash amount that's required is of the order of $200,000 or $300,000, which is kind of our sweet spot. But if the lawyers want to get paid cash up front, it's these cases are quite large for us to fund.
Right. Yeah. One thing that somebody wrote in the comments, which I think is a really good question: what happens if one of these legal companies wins the case and then can't pay you back for some reason? Because I would imagine you don't want to be legally fighting against a law firm, right?
Well, actually, we would like that situation. If we had a breach of contract against a solicitor, that would actually be good for us, because typically solicitors have professional indemnity insurance up to about £3 million, I think, in England. And they tend to be quite rational. So if you have a strong case against them, then they're
pretty easy to collect.
We better settle this. Yeah. But we're actually contracting with the claimant. And the way that we structure it is we're not actually lending money to the claimant. We're actually taking it's called a partial assignment of the proceeds from any proceeds that he gets from the case. And we actually also enter into a kind of irrevocable, we get an irrevocable commitment from the solicitor who's representing the claimant that, first of all, the solicitor will do everything he can to make sure that any proceeds that come from the case will go into the solicitor's client account. And then secondly, the solicitor contracts with us, confirming that he will make sure we get paid first. Okay. So the solicitor is in the picture, making sure that we get our share of the proceeds. But I mean, it's a good question. And, there are situations where the claimant signs up with a litigation funder and agrees to pay very high rates of return to the funder in exchange for the capital to run the case, subsequently succeeds and wins the case, and then has buyer's remorse and turns around and really does not want to give 20, 30, 40% of the proceeds to the funder and looks for ways to renege, and it can get messy. So it's an additional complexity factor.
Yeah, but what makes it interesting, probably. So you've seen what's going on in the peer-to-peer lending market with some of the failures within the sector. Retail investors have to be very careful now about what they're doing, because we've seen this history of, yes, some companies have done well, but we've had some disasters. How do you protect investors' money? Who are obviously, are you actually strictly peer-to-peer too? That's another thing that puts in my mind.
Yeah, so we are an appointed representative of a FCA regulated principal firm that has permissions to source equity capital from investors. So and we also work closely with an AFM, a fund manager. So strictly speaking, we're really in the fund management business rather than peer-to-peer. So we don't have a peer-to-peer license. We effectively liaise with someone who has a fund management license. So we're more like Seedrs or Crowdcube, more like equity crowdfunding businesses. But the distinction is that Seedrs and Crowdcube will be working with a company that wants to raise money for itself. When we're raising money, we actually raise money into a vehicle that we are effectively helping to manage. So it's closer to a fund management model than peer-to-peer. That's probably a long-winded way of answering the question.
Yeah. And so as far as you protecting investors' money, that is obviously done through legal contracts that you have when you take you saying you're taking a settlement share of any funding that comes through. So I presume you have a separate legal solicitor that draws up those documents in order to protect investors' money on.
Yeah, correct. So we have we've paid quite a lot of money to expensive corporate lawyers to develop the contracts and review the contracts that we enter into with the claimants. But you're right. I mean, that is an area of operational risk that we need to address. In terms of keeping investors' capital safe, so when we raise money for a case, initially the money goes into the client account of our principal firm. So we're an appointed representative of a principal firm. So during the capital raising process, the money is sitting in the client account with, I think it's Barclays, and I think actually the government deposit guarantee does apply to those particular funds. Then once the target has been reached for a particular claim, then the money moves into our SPV, our funding vehicle for the case. And typically, we've, as I mentioned, we're raising where it varies case by case, but typically we're raising the full amount needed to fund the case to the end of trial, and that money sits remote from AxiaFunder. So if AxiaFunder, heaven forbid, was to go into liquidation or have some kind of issue, it wouldn't impact the capital that gone into a particular case. It's a separate vehicle. Mm-hmm. It's bankruptcy remote from AxiaFunder. As it happens, AxiaFunder, we just I'm pleased to say we raised a good amount of capital recently, so that we're in a pretty strong capital position. But even if anything was to happen to us, investors in a particular case, could basically just sit to the end of the case, and if it wins, they would get paid and they wouldn't be impacted. Would
that be done through some kind of a third-party administrator that if something did happen at Axia that would complete that situation?
So I'm actually effectively a director of the general partner of the fund that looks after the cases, as well as a director of AxiaFunder. So I kind of wear two hats. So if AxiaFunder was to disappear, then I would just, because I value my reputation, I would make sure that I would, act in the best interest of the investors in that particular vehicle. But yeah, I mean, it's, kind of supporting that view. It's not a huge amount of work once you have already invested into a case. To some extent, the litigation funder has a back seat in the litigation. It's really a waiting game after you've backed the case to see if it wins or not. So it's not a huge amount of work to do that. And actually, just on that, it's very important that the litigation funder doesn't meddle in the case. So there's this concept called champerty that if the litigation funder started to throw their weight around and coerce or put pressure on the claimant to do a certain thing, or start to impact the litigation, then it could potentially breach the contract that we have with the claimant, and the claimant could just turn around and say, you've voided your contractual right to any of the proceeds. Mm-hmm. So we very much have to sit in the back and
hands off,
not meddle.
Yeah. Absolutely. Is your company currently running at a profit? And if not, how long do you think that is going to take for you to get to that point?
Yeah, it's a good question. So we expect that we will reach profitability later this year. We're currently loss making. We have, as you can imagine, a relatively fixed monthly expense base. There's big, the core team, legal expenses and so on. But as we grow the volume we're doing through the platform, we expect to reach profitability later on this year. And to that, we just added resource to our case assessment team, such that we'll be able to process more cases per month. We really need to be funding something around, I would say, 350, 400,000 pounds of cases per month in order to break through to profitability. And we think that that's well within our reach this year, as we add more resource to the assessment team.
Okay. And so with a relatively, small, what I consider, it's a loan book. I always say loan book because, you got 14 cases.
Yeah, assets under management.
Yeah. Where does your revenue come from exactly? Is it on the retrieval side for your company? Do you get a percentage of that?
Yeah, so we have basically two different types of revenue. So we charge an upfront fee when the money is raised. And the way it works is we charge that fee to the claimant. So suppose the claimant, just to make the numbers easy, needs £100,000 to run their litigation. We will go and raise perhaps 110 or 112,000 from investors, and effectively, if I can say we basically provide that capital, 112,000 to the claimant, but then immediately take 12,000 as a revenue fee to AxiaFunder. So we get an upfront fee. And then, suppose that everything goes perfectly and the case wins 2 years later, typically the SPV will have a contractual right to something of the order of 100% per annum return on that capital. So, in this example, it's 112,000. So 2 years later, there's 224,000 of profit. Mm-hmm. And we contract that we get 20% share. We get a 20% performance fee of that 224. So at the back end, there's 48,000 coming back to AxiaFunder. So we get an upfront fee, which we like to think is, kind of covering expenses, keeping the lights on. Mm-hmm. But then we also have a meaningful back end fee, which means that we're strongly aligned with the investors in the case. I think investors would be nervous if we didn't have a back end share of the profit.
Of course, yeah. I mean, you've got to make money. That's one of my always concerns about alternative finance companies.
And just to that, one thing I don't think we touched on yet. We funded 14 cases. We just before Christmas, we did our first funding through a limited partnership structure. And previously we had been funding the cases through a limited company. So companies are less attractive in some ways for investors because they have to pay corporation tax. Mm-hmm. So if you look at the net after-tax return for investors, there's corporation tax coming out, and then there's income tax or capital gains tax for the investors. So the net after-tax return for investors is relatively low compared to an investor who's put money into a limited partnership, where there's no corporation tax because limited partnership is tax transparent. And then, on our numbers, and people should get their own tax advice, but on our numbers, we're pretty confident that for many investors, the net after-tax returns will be meaningfully better through the limited partnership. And the reason I mentioned that in the context of our profitability is that, the fact that those returns have just had a big increase for the investor actually leaves more room for Axia to increase our fees a little bit so we can get to profitability more quickly while still offering what we think are very attractive risk-adjusted returns for investors.
And so what is Axia's biggest challenge for the business for you right now?
So we have constantly changing kind of top priority in terms of issues we're trying to solve. I would say right now I think the top priority for us is actually to find those high net worth and professional investors that are willing to come in and increase our firepower, if I can put it like that, so that we can consistently fund those £500,000 or £600,000 cases instead of, currently we can relatively comfortably fund cases that need 250 or 300,000. But it would be nice if we could find an extra pocket of capital. And it's just something we haven't really had time to focus on until recently because we've been so busy, running the business operationally, dealing with claimants, finding cases. But now we're just starting to allocate more time to trying to find those investors. So I would say that's the top priority. But of course, at a very simplistic level, a platform like ours has three main challenges. Find the capital, find the good cases, and then also build a team. So to be able to make the whole thing work, we need to build a very capable assessment team. So those are kind of three challenges we're constantly trying to manage in parallel, I would say.
You're an expert juggler.
Yeah.
You got to be. One of the questions that was asked about that extra money coming in from what you were speaking about before, the limited partnership, is that paid out counted as income or capital gains?
It's a good question. We have had high quality tax advice that guides that it will be capital gains tax treatment, but there is some risk that it could turn out to be income. So we can't give a definitive answer, but we expect that it will be a capital gains tax treatment. And the reason for that is that these are relatively long-term investments, and we are not lending to the claimant. We are actually investing and buying a piece of the proceeds from the case. So because we're buying a piece of the case, it's a capital allocation to a case, and therefore we believe it will be treated as a capital gain if the case wins.
Yeah, I think
because in effect, the investor will be selling their share of the case back to the claimant as and when the case resolves.
Okay. And I think at the very early on when we started, we were having a little bit of tech issues. So one of the questions that the audio might not have come through was I asked you when Axia launched, which you said 2019, right? Or 18?
January 2019 was our first offer on the platform.
That was your first loan. Okay. How long were you working on the business before you offered your first loan?
So the business AxiaFunder, its registered name is Champerty, and it was registered, I believe, in December 2016. And then for that first year, from December 2016 to November 2017, I wasn't working on it intensively. But from about November 2017, I started to work on it full time. So there was a little bit over a year of preparation where, we were figuring out how to put everything together in terms of the regulations, the tech, the processes, the finances, and so on. So it took about, I would say, 14 months to prepare before we were launched.
Okay. We got a couple of questions here that I'm just going to ask you that people have been asking. We already talked about how many cases you've completed. You said 6, I think. Is that right?
So we funded 14, of which 6 have resolved positively and 8 are ongoing. So we haven't lost any cases yet, but inevitably we will lose a case at some point, but none so far.
Okay. And what's your team size, Axia?
So we have 3 full-time employees. So myself, another director, and an analyst. And then we have 2 part-time case assessors that work for us a couple of days each per week. And then we have a part-time business development person. So 3 full-time and 3 part-time. But we're currently looking to add further members to the team as well.
Okay. And the court cases are all UK based?
No, just going back to the team question, actually. Yeah. So because we're an appointed representative of a principal firm, we benefit significantly from that principal firm. So they have, I don't know exactly what their headcount is, but there are a few people there that also support us in terms of compliance, technology, and operations, and so on.
Okay.
Going back to your question on the geographic mix, of the 14 cases we funded so far, 1 is in Spain, actually. So we funded a unfair competition claim in Barcelona. And all the other cases to date, I think it's fair to say that they are in the UK. However, we are currently closely evaluating a case in the British Virgin Islands. So it's a group litigation potentially out of British Virgin Islands. And in principle, there's no reason that we have to restrict ourselves to the UK. It's just that, there's quite a well-developed legal system here, and geographically we're here. But longer term, we hope to do more continental Europe, European and Australian and potentially US cases.
Okay. Yeah, if you need me to go and verify the British Virgin Islands, I would be happy to do that for your company. It's not a problem. Offer.
Okay, you could do some due diligence for us.
Yes, absolutely.
Okay.
Steve Graham asks, if you fail to reach the full amount needed to fund a case, is the money returned to the lenders? But it sounds like you don't have that problem. Right.
Well, on some of the larger cases, I mean, that's actually happened to us once, in the last, couple of years. And, I think I mentioned that large case that we were trying to fund for 4 or 5 months. So we did have the unpleasant experience where we didn't get the case fully funded on our first attempt. So we did have to return all of the money to investors. The way it works actually is that investors, will make a commitment. So they will say, I want to make a commitment of X thousand pounds. Let's say it's £5,000. Then they have, a number of days or a few days to actually transfer the money to our account. And then once we reach the target in terms of commitments, we'll typically stop taking new commitments. But then there's a process that people actually need to put the funding in for their commitment. But if we haven't reached the target, we'll return all of the capital to investors. In fact, it's not even our decision, so it's the decision of our principal firm. Right. They wouldn't allow us to keep the money.
Okay. And Paul New says, have you had any losses on investments? I would imagine not at the moment. Right?
No, we haven't because to date we've only had 6 cases resolved positively, and the other 8 cases are still running. So we haven't incurred any losses. And no, none of our case investors have incurred losses to date. However, at some point they inevitably will.
Okay, and then you've talked about insurance, correct?
Yeah.
Dave Dawson says, it says on the website the insurance against costs is not always foolproof. Can you explain that, what that means?
Yeah. Well, very few things in life are absolutely foolproof, but yeah, I mean, it's a good point. And we do point out to investors that in some very remote circumstances on a particular case, it's possible to lose more than you actually invest, which, is counterintuitive to most investors. And the way that it can go wrong, let me paint the picture. So if we invested, if we raise capital for a case where there's adverse cost risk, we will always make sure there's after the event insurance contracted. However, here's the worst case scenario. Yeah. So we invest in a case that has after the event insurance. The case is lost. Yeah. The claimant loses for whatever reason. Then the first expectation would be that the insurance company that's provided the after event insurance would step in and pay the cost of the other side. Now, there are 2 ways that could go wrong. The first way it can go wrong is if the insurance company has capital adequacy issues. So if we're in 2008 financial crisis, you can have an insurance company just not have enough money to pay out the claims. It's pretty unlikely, but it has happened. And in that instance, the insurance would fall away. The next step would be look to the claimants and say, okay, you started this case. Unfortunately, your insurance company has fallen over. Claimants, do you have the money to pay the cost of the other side? If the claimants put their hands up and say, we don't have any money, judge, the judge can then decide, okay, well, someone has to pay the bill. Who's the next, most logical person to pay it? And they look to the investors. Now, if we're funding a case through a limited partnership, the word limited, the clue is in the name. There is the equivalent of a corporate veil, and the legal system is very slow to pierce a limited liability corporate veil, but in theory the judge can. And then at that point the dynamic would be, there's very little precedent for this, but the potential dynamic would be the judge would say, right, who are the 50 or 100 investors who backed this case? We've got an adverse cost bill here of, let's say £200,000. Who invested how much? And then in theory, contact the 100 investors and ask them to, contribute their pro rata share of the adverse cost bill. But you can imagine that's a huge amount of operational complexity and a very expensive process. So we think that it's pretty unlikely.
Pretty unlikely, yeah.
So you can see, first of all, you got to lose the case. You need the insurance company to fail. You need the claimants to have no money. The judge to decide to pierce the corporate veil, and then the judge and the defendants to have the resources to individually go after all of the investors. So that's one way it can go wrong. The other way that it can go wrong, to mention briefly, is if the insurance company can prove that the claimants misrepresented the facts of the case when they asked for the insurance, that would give the insurance company a pretext to void the policy. But again, this is a very unlikely outcome because it's a reputation business, and if an insurance company gets a reputation for not honoring its contracts, all the lawyers stop using them. And then just related to that, I'll just give you one extra piece of detail. It is possible in some situations to get what's called a anti-avoidance endorsement on the policy, or a deed of indemnity. And what that means is that the insurance company commits, irrespective of whether or not the claimants misrepresented the facts of the case, they have to pay out on the policy. So it's a bulletproof policy subject to their capital adequacy. But anyway, that's kind of unpacking some of the detail on that. But to put it in context, we think that it's it's very hard to put a precise number on it, but we see this risk of having, losing more than you invest being, in my view, and I can't prove it, but my belief is that the probability of that happening for any individual case is less than 1%. And if investors spread their bets across 10 cases, for example, then the probability of them losing money overall because of this particular issue is very, very low.
Okay. And another question, the minimum amount is £1,000. Do you have a maximum amount that somebody can invest or not?
Typically not. The short answer is typically not. In theory, we haven't had that problem yet. But if we were raising 150,000 and someone put in a ticket for 150,000, then we don't have anything in our policies that prevent them from taking the full amount.
Okay. And Alan, who I believe is an investor through your platform, has asked what the upcoming case pipeline's looking like.
Yeah, I get that question from Alan quite frequently. So we have a number of cases that we're evaluating currently. We don't have any that are imminently going to be on the platform. My expectation is we'll have the next case in like 4 or 5 weeks. Okay.
Perfect. Well, I think we've covered a lot. For anybody that is interested, AxiaFunder, you can go to their website. Is it AxiaFunder.com? Is that right?
Yeah.
Okay.
Correct. Yeah,
check them out.
AXIA.
Yeah, AXIAFUNDER. For some reason, I keep wanting to say funding, but just I don't know why, but it's AxiaFunder. And I've certainly learned a lot about what you're doing. I think it's a very interesting niche. So for anybody that's looking for a way to try to get some returns in this very difficult day and age. Before you go, I do want to pick your brain a little bit about what is going on with the banking system. Are they afraid of this cryptocurrency revolution with decentralized finance that's coming on? What are your views on it? Do you like it? Do you hate it? Coming from the banking world.
Yeah, I have to confess that I completely missed the whole surge in Bitcoin. I did own one Bitcoin when it was valued at $5,000. And after about 20 minutes, I sold it because I just couldn't explain to myself why I owned it. My concern with it would be that the whole thing goes to zero because potentially of regulatory risk. There's no intrinsic value in the crypto assets themselves. There's an excellent podcast. I hope you don't mind if I recommend another podcast on your podcast, but there's a chap called Harry Stebbings that runs the 20-Minute VC, and he just recently interviewed Mark Carney on crypto, and he's definitely more of an expert than I am. But I think his view is that the value of blockchain and crypto is very much around the ability to coordinate payments and facilitate payments very efficiently. Whether or not to store a value, I think he's much less convinced. But I'm by no means an expert. So I should
and I think one of the funny things is, we've seen this big explosion in these NFTs, people owning pieces of digital art that are selling for millions of dollars. And I've always said that value is just perceived on self, isn't it? It's kind of like, what do you perceive value in a Rolex watch or a fine asset of a car or a piece of art? And sometimes it's hard to quantify
Yeah,
exactly
very much.
white
I mean,
people. Yeah,
yeah,
yeah.
I would completely agree. I mean, one thing I would flag to people, I would be very cautious about investing into more esoteric things that don't have any underpinning in value, like, like NFTs or crypto. When the Federal Reserve is raising interest rates, they've been printing money, and then, it doesn't take a genius to figure out that when they're printing money, then people start to get very speculative and put money into lots of things like crypto assets. But once the cycle turns and they start raising interest rates, you could see a very sharp reversal, I think, in some of these speculative investments. It remains to be seen how, if that will impact litigation. It could be that we're also in that category, but I would hope that the underlying fundamentals will win out, and people will not run away from litigation finance when the cycle turns.
Absolutely. Well, Cormac, once again, thank you very much. I'd love to have you back in the future and see where you are and how the business is going, and appreciate your openness and transparency. I've really enjoyed it, and I hope you have too. And I hope the people out there listening have gotten some value and some really good
Great.
information about litigation funding.
Okay, I appreciate it. Thanks for the opportunity.
Yeah,
Okay.
absolutely. We'll talk to you again soon. Okay.
Okay. Thank
Bye-bye,
you.
Cormac. Thank you.
Bye-bye.
Bye.
Bye. Bye.
So there you have it. Cormac Leech. Sorry about the difficulties at the beginning. What can I say? It's live. That's what happens here. Things happen. But yeah, I hope you enjoyed it. I enjoyed it. I think it's really interesting that we have these niches inside alternative finance that are just very different, and there's just so many ways to invest and make money nowadays. But again, if you've enjoyed the stream, please hit that thumbs up. I will get the technical thing sorted out. I don't know why that didn't work this week, but we figured it out. And anyway, thank you again to Cormac. He did a great job. I love the transparency and the willingness to be authentic and kind of explain the inner workings of the business, because I think it's important. But we're gonna announce the holiday winners. So 6 lucky people will be receiving either £30 of cryptocurrency, Bitcoin, if you have a Coinbase account, or £30 Amazon gift card. So I need to look at the list. I have actually direct message people on the Discord server. So if you did sign up on the Discord, check your messages, because I'm going to tell you who it is that won. And we had the winners. A couple of them are screen names, so I don't know their actual names because they're signed up as screen names. But you're on Discord. We had Alan S., which I'm wondering if that is Alan. I think it's maybe Alan Stratford. So you're a winner. Dennis Wilson with DENNIS, 2 N's. Dennis Wilson, you're a winner. Paul1277 is your screen name on Discord. Paul, you're a winner. And then Stephen Hale, who is also a winner. Alan Toombs and John Morgan. So that is who won the giveaway. £30 to each of these people. So happy to be able to do that for you. Hopefully you don't spend it all in one place. But again, if you have not been in touch with me, I know Alan and John I've gotten emails from, but the other people on the Discord, Alan S., Dennis Wilson, Paul, and Stephen, I know, has been in touch already. Please check your friend request that you would have gotten from me on the Discord and a personal message, so I can get your information from you and get those gifts over to you. So well done to you to you 6. And that was completely randomly generated, by the way, through the powers of the interwebs. So we'll have another giveaway again soon, I'm sure. What do I think about AxiaFunder? Again, I think if you have the money to spread it around across a good amount of court cases, I think you'd be okay. It's not a investment where you want to go in with like $2,000 and try to pick out the 2 cases that are going to be successful, because you are going to be at risk that you may lose out on those cases that you pick out. Very similar to trying to pick out individual stocks and make sure you're diversified. But it sounds like a really interesting opportunity to get some yield on your cash. We will be back next Thursday, same time, 7:30 p.m. UK time. We're going to be talking about obviously the peer-to-peer lending news, what's going on. We're going to be doing a panel hopefully soon with 3 CEOs of peer-to-peer lending who will come and do a Q&A at one time. So I've been reaching out to see what combination of people we can get together at the same time. It's always a bit of a logistical challenge time-wise and getting people in the same page when it comes to that. But I'm going to make it happen. It will be the first kind of panel of its kind to come online on a live stream. So excited about that. But we'll be back next week. And we're going to talk about crypto staking next week too. How you can actually take your cryptocurrency and earn some really, really good rates of return by locking up your cryptocurrency for periods of time. I mean, I've seen percentages from 5%, up into the triple digits. But we're going to be focusing on some of the, I think, safer bets within cryptocurrency where you can stake and really get some good yields, since bank interest is just absolutely crap right now. And I think there's some great opportunities. So again, hit that thumbs up if you can before we end the stream. And thank you again. Love every single one of you for being here and supporting the stream every week. Again, if you want to become a Patreon member, you can scan that little QR code or check the link below if you want to support the channel. Join the Discord, join the Facebook group, and help build this financial thing community. Again, congrats to the 6 winners. And we'll see you next week. Everybody have a wonderful weekend. Be safe out there. And that is all I have for you this week. Take care. Bye.